It was late afternoon in 2020 and the world felt like it was falling apart. Inside his office, Michael Saylor stared at a series of grim economic reports. Governments around the globe were printing money at record speed to keep the economics afloat during the pandemic. But to Saylor, all that extra money sounded like a warning bell for inflation. Normally, he would have been proud of MicroStrategy's large cash reserves. MicroStrategy was a software company he had founded, helping businesses turn data into useful insights. But now, those reserves felt like a block of ice melting under the sun. Every time he checked the numbers, it seemed like the value of that cash was slipping away. His eyes drifted to a Bitcoin price chart, glowing on his laptop screen like a faint beacon of hope. A few years ago, he would have brushed off Bitcoin as a passing fad for internet speculators. But on this evening, with economic chaos everywhere, Bitcoin suddenly seemed like something solid in a world of quicksand. Leaning closer to the screen, he wondered if this digital currency might be the lifeboat he was searching for. Michael Saylor was born in 1965 in Lincoln, Nebraska. He spent much of his childhood on US Air Force bases, surrounded by roaring jets and military discipline. He dreamed of flying fighter planes or maybe even becoming an astronaut. After earning a scholarship to MIT, he studied aeronautics and astronautics, aiming for the skies. But his dream of piloting jets ended abruptly when doctors discovered a benign heart murmur. Grounded from flight school, Saylor had to find a new path. Instead of giving up, he turned his analytical mind to another frontier, data analysis. In the late 1980s, he joined DuPont as a consultant, building computer models that predicted market trends. Even then, he showed a knack for spotting patterns hidden in the chaos. He couldn't fly jets anymore, but he could still push the boundaries of technology. Perhaps, he thought, there were other ways to reach high altitudes, just not the kind you find in the sky. In 1989, Saylor co-founded MicroStrategy with fellow MIT graduate Sanju Bansal, armed with a bold vision and $250,000 in seed money from DuPont. The goal was simple: show companies how to turn raw data into powerful insights. At that time, most businesses gathered data but didn't really know what to do with it. MicroStrategy arrived at the perfect moment. As the digital era took off, everyone discovered that data, once ignored, was actually a gold mine for making better decisions. Early clients include giants like McDonald's, which use MicroStrategy software to measure the success of its advertising campaigns.
Time for breakfast, Birdie!
Oh boy, hotcake!
And Visa, which relied on the company to analyze customer spending patterns. Suddenly, Saylor and his team were the go-to experts on turning millions of data points into easy-to-use knowledge. By 1998, MicroStrategy was ready to go public. Investors were excited about its potential. On the first day of trading, the stock soared. Overnight, Saylor became one of the richest men in Washington, D.C. Media outlets flocked to him for interviews, and he revealed in the attention, working long days, then diving back into research at night. But all was not calm. The late 1990s saw a surge in tech stock prices that many call the dot-com boom. It was a time when overconfidence was in the air and felt like every new internet company was on a rocket ride. Saylor and MicroStrategy stood in the middle of this wave, unable to see that it might crash at any moment. In March 2000, the dot-com bubble popped like a balloon pricked by a needle. One day, MicroStrategy's stock was soaring. The next, it was in a free fall. The company had to restate its financials, and investors panicked. MicroStrategy's share price plummeted by 98%. Where Saylor had once hailed as visionary, now he was seen as a cautionary tale. It was a hard lesson. He lost billions of dollars, and critics wondered if MicroStrategy could ever recover. Regulators launched investigations. Headlines turned sour. Many CEOs might have quit, but Saylor wasn't done. He refocused the company on its core strength, helping businesses unlock insights from the data. Over time, MicroStrategy built new products and expanded into areas like mobile and cloud computing. Gradually, it regained stability. It wasn't an easy road. Employees worried about job security, and Saylor worked tirelessly to keep morale high. By the late 2000s, MicroStrategy had repaired its reputation, but the near collapse burnt a lesson into Saylor's mind. Markets can shift overnight, and what seems unshakable can crumble in a flash.
We sold $1.5 billion worth of stock, backed by $500 million worth of Bitcoin. We bought back $1.5 billion of Bitcoin. We captured nearly $1 billion gain in the arbitrage.
Fast forward to 2020, a global pandemic shut down entire countries.
China has identified the cause of the mysterious new virus.
Coronavirus.
The coronavirus.
The coronavirus.
Virus has reached Australia.
This is a rapidly emerging situation.
Supply chains fell apart. Government poured trillions of dollars into the economy to prevent total collapse. Inflation, which had stayed low for years, began creeping closer to center stage. That meant the same pile of cash MicroStrategy kept for emergency might buy less and less in the future. To Saylor, that pile of cash felt like an ice sculpture on a scorching sidewalk. The hotter it got, meaning that more money was printed, the faster it melted. He needed a safe place to store value. But where? That's when Saylor took a serious look at Bitcoin, our digital currency created out of the 2008 financial crisis. At first, he thought it was too speculative. But as he studied Bitcoin design, a network run by code, not governments, he started to see it as a hedge against inflation. The supply of Bitcoin was fixed, meaning no one just print more. It worked across borders, didn't rely on any single country's policies, and its entire set of rules were spelled out in public code. For Saylor, investing in Bitcoin wasn't just a money move. He saw it as a rebellion against watching your savings erode due to inflation. It felt like a lifeboat in stormy seas. Of course, many people call the move reckless. Bitcoin was famously volatile, and critics expected to crash at any moment. But Saylor remembered how sticking to old assumptions had almost destroyed MicroStrategy in 2000. This time, he was determined not to stand still. In August 2020, MicroStrategy announced it had bought $250 million worth of Bitcoin. It was a bold step, and the financial world was shocked. Some experts called him reckless for putting a big chunk of a public company's treasury into digital currency. Others quietly wondered if he was onto something. But Saylor didn't stop there. Over the following months, MicroStrategy took in more and more Bitcoin, financing it by selling convertible bonds. He began speaking publicly about Bitcoin's potential as a digital gold. Eventually, he even talked with Elon Musk, whose own company Tesla bought $1.5 billion worth of Bitcoin soon after. Suddenly, Bitcoin didn't look so outlandish to major corporations. Of course, Bitcoin's wild price swings attracted attention from regulators and journalists. Some people joked that MicroStrategy had turned into a Bitcoin fund with a side software business, but Saylor was transparent about the risks. Unlike some other crypto players who tried to multiply profits with complex schemes, MicroStrategy stuck to a simple buy and hold strategy. Behind the scenes, Saylor believed that this move did more than just protect the company's savings. It challenged the entire idea of how money should work in the 21st century, prompting CEOs, entrepreneurs, and everyday people to ask whether traditional currencies were as solid as they always believed. Michael Saylor's story isn't just about one company's treasury strategy. It strikes at a concern shared by almost everyone. How do we protect what we earn in a world where governments can print money freely and economic storms blow in without warning? People everywhere worry about the savings losing value. Saylor's shift toward Bitcoin put these questions in the spotlight. He also supported education through Saylor Academy, providing free online courses to help people learn new skills. In his view, both Bitcoin and education empower ordinary people, letting them take control instead of relying on old systems that might be outdated. Of course, there's no guarantee this bet will pay off. Bitcoin supporters see it as a future of money, while skeptics think it's an overhyped excitement. But whether you agree with Saylor or not, his decision forced the world to rethink what money really is. It opened the door to conversations about how we handle inflation and whether technology might offer new ways to store value. From a kid on Air Force bases dreaming of a supersonic flight to a tech visionary who survived the dot-com crash, Michael Saylor built his legacy by adapting to change. When he embraced Bitcoin, he wasn't just making an investment, he was starting a conversation about the future of finance. Today, some praise him as a genius who saw the writing on the wall, while others say he has taken a massive, reckless gamble. Time will decide which side is right, but there's no question that he has pushed companies, governments, and everyday citizens to think differently about inflation, savings, and the structure of modern finance. His story shows that sometimes you have to question everything you thought you knew. Even a big successful company like MicroStrategy can't hide forever from global forces like inflation. And in a world where stability can vanish overnight, the boldest choice might be to search for new solutions, even if they come in the form of digital currency once dismissed as just a fad. Only history knows if Michael Saylor's gamble of Bitcoin will stand the test of time. But no matter the outcome, his journey reminds us that resilience, courage, and a willingness to challenge assumption can shine a light when everything else goes dark.
We're buying all the time. We're buying every quarter. We're buying the lows, the mids, the highs. You know, I'll be buying the top forever.